Good day, everyone. Well, we see that the ECB continues to take a dovish stance, although it wasn't dovish enough for the markets, so they initially sold off because they didn't get what they wanted to hear. That is that the ECB would further extend out their money printing campaign beyond, I think it was March of 2017. But nevertheless, their words were very dovish in the sense that they reiterated that negative rates would potentially go more negative if need be, and that the money printing expedition would continue at length for I guess in the long run. That's their view, because things just aren't getting much better over in. And then we also have seen you know, these market averages, the U.S. NASDAQ, and it's trying to get out of this sideways move that started in August, but there's various ups and downs, of course, to the global situation, and so it gets pulled back in, and there's a bit of some riptides in here, but it doesn't. What doesn't really matter what the S&P and the NASDAQ are doing. I mean, the S&P's been pretty much going sideways since July, and if you're trying to make money using market direction model, which is a longer, it relies on the long-term trends, and it's not getting one, so it's going to just sit on its signal. It's no reason to sell it. I think it's up slightly, but it's up a few percent. But the VIX volatility model, on the other hand, as it demonstrated to me last year, it can do great things even in sideways, choppy environments. Last year, in the pre-beta, shall we say, it was astounding how much profit it was able to garner last year. And I started using real money. The slippage is minimal. Obviously, commissions costs should be minimal unless you're trading a $1,000 account. But it's the current signal certainly proves that out. Markets are going sideways, but the current signal is up close to 40% since it's I think it's July 15th signal. So. And the other factor, of course, is that, as we've said many times, focus on your stocks. If you're market timing, I think the VIX is a great solution to these kinds of environments. But if you're not into market timing, or maybe you do both, you're a hybrid like I am, then focusing on the stocks is always the way to go, because they belie what the market averages are doing. In fact, I'd like to go ahead and talk about some of these stocks that we've placed as actionable and have ended up on our focus list. We can start with, if Gil will do the honors of bringing up the charts, as usual. Let's start with Grub.
Grub-a-dub-dub.
We've got, yeah, Grub-a-dub-dub in the tub. We mentioned this one on August, was it August 19th?
It would be, yeah, the 19th on this pocket pivot here.
Yeah, and so this one, it was not extended relative to its chart pattern, so it could have been bought on that day, and it's since moved up for more than 2 weeks. So in context with its overall chart pattern, it generally doesn't move higher in linear fashion for more than 2 weeks without pulling back to support. And you can see that 2 days ago it was getting a bit ahead of, the distance between it and its 10-day was getting a bit large. So some profits could have been taken earlier this week, and it's currently pulling back on lower volume in a tight constructed manner. So it may very well come back to support, at which point it could be rebought, perhaps.
Can I point out something here, Dr. King, that I think is interesting?
Yeah.
You notice that if you're looking for, if you consider this pattern here to be a flag, okay, and you're looking for a breakout here, you notice that there's no volume. So if you're using standard buying rules, standard breakout buying rules, O'Neill style standard breakout buying rules, you're sitting around waiting for the breakout that isn't really occurring, but the stock is moving higher even though there's no volume in here. But if you bought on the, you got the pocket pivot. I'm suffering from verbal dyslexia today, but you see the pullback.
Peter Piper picked a peck of pickled peppers. How about that?
Let's see, what am I doing here? Okay, here we go. You see that the day after the pocket pivot, there is some overhead from the underside of this pattern. So you get a little pullback here. That's normal. The volume dries up. There's your low risk entry right there, using the 20-day line as a a selling guide. And some people ask me, well, how do you know, where do you buy as it's coming into the line? And for me, 1 to 2% combined with using the 620 chart as a guide for an entry is how I'll do it on pullbacks. And it's not perfect, but at least it keeps you in a position where your risk is, say, 1 to 2% down to the line, and then if you're allowing for another 1 to 2% of porosity on the downside from there, your maximum risk is like 3-4%, which I think in this market is really good and much better than 6-7. Anyways, that's all I had to say about that. Carry on.
Yeah, and for those who can't look at the markets intraday, or let's say for those who don't use a 620, they don't have the time to use a 620, you can look at a daily chart like this one and say, all right, I'm going to put a buy limit as it approaches the 20-day. I'm going to put a buy limit in at say 1% from there. Again, that's all contextual to the chart, but you put in some buy limit, and so it would get triggered on that day. But you also at the same time put in a stop, the sell stop, so that if it's triggered but then it keeps heading down through the 20-day, you're out of the position, and maybe you could calculate your loss. What's your buy limit price and what's your sell stop price? That's your loss roughly. And that could be controlled to within a couple % on this kind of a stock. And actually, there's many stocks that have repeated this kind of action. So this is not the exception by any means. So yeah, because I know some people that they don't have time to put to look at this stuff intraday as much as they'd like, and they're going to miss those sorts of things. But Seikoda, this is a page from Seikoda's book. Always have your sell stop in place, and if then I guess you don't have the time to pick up the stock, then you can always put in a buy limit or a buy stop. Buy stop obviously would be for those who prefer to buy on strength. And of course, we have all sorts of trading personalities, in our universe. So. It's not a one-size-fits-all situation. But moving on to the next, actually the next couple stocks, we mentioned in a report on August 25th about TWLO and ACIA, ACIA. Actually, let's pull up ACIA first. And we mentioned that keep an eye on these because they're selling off hard into deep areas of potential support. And so investors should be alert to possible lower risk entry points developing in this process. So indeed on the 25th of August, ACIA did get support around its 10-day moving average. On the 25th, it did have a low volume pullback, and then it had a pocket pivot on August 29th, after which it traded tight for 4 days. So its pocket pivot on September 6th, which was 2 days ago, that's too extended. You don't have to buy up there. In fact, you shouldn't, as we've said, in this kind of market environment. And you would have already been in the stock by then because you had ample buying points prior to that breakout on Tuesday. And in fact, you might even look to sell on a day like Tuesday or Wednesday, yesterday, because the stock seems to be getting, you have a nice gain. This is a really nice gain in a short amount of time.
Hey, Dr. K. On this, this one is interesting because I guess I got an email yesterday from somebody who said that IBD called this a failed breakout from a high tide flag, and I want to warn everybody about these. We talk about in the second book that we wrote the application or the use of labels as a heuristic crutch. So trying to label something as it's a high tide flag, and therefore you just buy it and you're going to make a ton of money. And I think that misleads people because you don't really need to pay attention to any of that. And this morning, anybody who follows us on @VSInvesting on Twitter, I put up a chart of ACIA, and there are actually 3 buy points in the stock on the way up. And anybody who understands our methods didn't need us to tell them, but you had a Bible gap up here after earnings. Then you have it comes up through the $100 level. So if you're using that 100 level plus another 2-3% porosity, you could implement Livermore's century mark rule as a buy point here along the 100 area, it runs up, you know, you could sell into that because that's a quick 20 points. That's 20% and like nothing flat. And then it pulls back and holds the 100 level, so there's a re-entry point. Then you get a pocket pivot here. So if you're swing trading this or playing this more actively, there's a lot of areas to enter this thing well before you get to here. And IBD's only looking at a breakout from a flag, which in this market I think it's a little bit too obvious. I actually bought the stock back this morning on the pullback near the 10-day line. So far it's working. We'll see how it goes. Stock's running about even now, so it's come back a good 4 points off the lows. And if you look at the 620 chart, let's pull that up here. Here, let me find it first. But, you know, I still think when you look at the weekly chart, trying to buy up in here just on the breakout is not only dumb, it's just kind of risky. And you don't need to do it because there's so many other ways to buy stocks. But if you look at this, you can see that what you have here, let me make this a little bit bigger so you guys can get a sense of what I'm looking at here. If you look at this on the 620, you see the break on the opening. So, you know, everything's getting sold. I don't know, what was it? Because the ECB is going to lower rates even more into negative interest rate line. Is that what it was, Dr. K, this morning? Yeah, okay.
Well, they're open to doing that.
Okay, wonderful.
So they're as dovish as ever.
So, you know, we're going to go further into negative interest rate line. As far as I'm concerned, all that does is make stocks more attractive on a relative basis. Yes, it creates a bubble, but the bubble's going to keep going until it starts to pop, and I think the signs will be there when it happens. So I'm not going to be fearful of the market rolling over. In any case, they take ACIA down towards the 10-day line on the daily. At the same time, I'm watching the 620 chart, and you see here you get this extension on the downside here where it breaks hard. The volume's pretty heavy right at the opening, but you immediately get a MACD stretch, and you get this, it starts to cross. But what I'm seeing at the all while this is occurring, and probably just a little bit before we get this cross here, so you get the stretch and the cross, I'm also watching the retest here as it comes back in here. Okay, so it bottoms out here, it rallies up, and it comes back in here. Notice how the volume dries up. That is a Wyckofffian type of retest. And that on the 620, I will use that to enter a stock as it's coming within 1 to 2% of the 10-day moving average, okay? And of course, if it doesn't work, it doesn't have to work, okay? But that, in my view, that's the intelligent place to be buying the stock. Jumping all over a breakout yesterday, or I'm sorry, 2 days ago, where you're up 12, 13, 14%, maybe more than that, from the continuation pocket pivot, which we put out several days before. That's a pretty damn nice profit to take. And then you can think about buying on the rebuying or buying back on the pullback rather than chasing that. So, you know, you use these tools, I think you expand your mind, open your mind to a lot of different methods, and they're really not outside the boundaries of the, you know, the OWL philosophy, as I like to refer to it, or as we like to refer to it, O'Neill, Wyckoff, and Livermore, because let's be real, Bill O'Neill took a lot of his stuff from Wyckoff and Livermore. Okay, so there's nothing invalid about doing that. I know I threw up a chart earlier today on Twitter about ACIA showing that, you know, you can talk about a high tide flag breakup, but that's old school and old methods that aren't as optimal. Okay, I'm not going to say all breakouts don't work. You do get some that work, but you can get faked out a lot. And if you're able to get in earlier, lower in the pattern at a much lower price before it breaks out, then I think you're putting yourself in a much better position to make money. So if you're buying this thing here or in here, by the time this breakout is occurring, you've already got a nice profit in the stock, so you're sitting pretty and you're not getting yourself into trouble, because otherwise IBD has no way for you to buy this stock until here. Okay, there's no place for them to say, oh, you have a base breakout and you can buy the stock. Maybe in here you had a base breakout where you could buy the stock, but would you be holding in through earnings? Hard to say. You know, it's already up a fair bit. But once it does this, there's no way to buy it otherwise. Yet we have a number of methods for doing exactly that. And I think, you know, you'll get some weird comments, and I know there's some Ken Slim cult members out there. And to me, those are just people who can't open their minds. They probably were dumb enough to spend $15,000 for a weekend seminar, and so they got a lot invested in that whole thing. You know, and they're asking, well, why do you spew such hate about IBD? It's not hate. It's just pointing out the reality of the current market and trying to come up with some better solutions. You know, I guess in this day and age, if you're against illegal immigration, you're a racist, and I guess if you think IBD's methods are less than optimal, then that makes you you hate them, I guess. Anyways,
The
someone
markets, the
said,
bottom line is
go ahead, Dr. K.
markets always change. That's the one thing that doesn't change is change. So count on it, and you know, markets can stay in a certain way. You know, like the base breakout rules were fantastic in the 1990s. You know, they were my bread and butter, and you know, you just had to keep on top of you know, it was a challenge of figuring out which stocks are going to hit the home runs as opposed to the singles. But breakouts, the markets were very forgiving back then, and markets traded in appreciably different ways back then. They were far more liquid. I mean, you could buy 10% of the daily trade, of the average daily trade of a stock without moving the price around much at all. 10%. Today, it's less than 1%. You know, everything's gotten very thin, and also the trading volumes continue to dry up because people, I think, continue to get frustrated with these sorts of QE-driven markets. We see it a lot of people and websites too just drop out. They've gone dark. But the key, of course, you know, in 2004, there was 2004, 2005. There was a lot of frustration because breakouts weren't working anymore, and that's. I mean, I was frustrated, and I went to the drawing board and figured out that pocket pivots were. They weren't. I didn't have a name for them at the time, but buying early in the base, there was a way to do it with low risk, or increase. It would appreciably lower your risk without taking away from the upside. In fact, it would enhance your upside. So, you know, that was one tool that I brought into play that worked very well. And the viable gap up method also came in shortly after that one did. And those tools have stayed with me to this day. But the difference now between these QE manipulated markets and back then, 10 years ago, is that the markets are even more unforgiving. So you can't buy pocket pivots on strength, especially if a stock's going to new highs. Pocket pivot breakouts aren't the way to go. You know, we find new ways to finesse the price volume action that where again we put the odds in our favor. So, you know, when you get a stock like I was going to talk about, let's see, this next one. I was just looking at Team actually.
TWLO? What about TWLO? You didn't talk about that one.
Yeah, I was just looking at Team and how it came all the way back to its 50-day, and I think we mentioned this one. And then, you know, again, you could put your buy limit in, you know, as it approaches the 50-day the day before, you know, or you don't know if it's going to do that, and if it doesn't, then fine, you're not in the stock. But if it does on August 25th on Team, you know, you're in the stock. You weren't even at your computer. You were at work instead, and you put in a sell stop under, you know, a couple percent, say, under the 50-day, something like that, and you'd be in the stock. And now it's, you know, now it keeps trading higher. But yeah, let's move on to TWLO. This is also one we mentioned in that report we sent out as you know, look for support, and it did get its support at the 20-day on August 26th. So yeah, it's very Team-like actually. It pulls all the way back to its 20-day and then bounces off there, and then 2 days ago you'd be sitting at 15 to 20% profits in a matter of several days. So you could start thinking about taking your profits, or at least partial profits, 2 days ago, because, you know, now it's having some sort of what looks to be a constructive pullback.
Yeah, and
so it looks like it might very well set up again.
What I would notice is as it comes up to the 60 level, notice it's never, even though it's run above that, the 60 level, it's never closed above the 60 level. And so that's near-term resistance, but you're backing in today, and it looks, what's the volume looking like on this, Dr. K?
We're at 14% above average.
Yeah, so
it's light.
Yeah,
it's gonna be probably low, because if it's 14% within the first hour, or like if it's 20% within the first hour, it usually finishes the day under its average.
Right, and I think, you know, you could get a pullback to the 10-day line at 55.19, which is about a little over a point from here. So not really. It's kind of coming into range here, so it looks good.
All right. Well, the next stock is the dramatic PI, Impinj, and here's one that has been hugely profitable in a short time. So partial profits, as we've advised, could be taken certainly over the last couple of days. But Pi is showing potential Acacia type price moves, very dramatic to the upside. So again, there's some longer term type investors. Maybe you want to trade around a core position and keep tight stops. So in that case, I still would have advised that some partial profits were taken over the last, sometime this week in this name, because I mean, geez, you're seeing in, what is this? You're getting in around in the low 20s, and then you're sitting on a 50% profit or upwards of 50%. So and this is the kind of market environment that is not 1999. It's not the last quarter of 1998. So don't expect these sorts of names to just keep going. There usually is a limited lifespan to how far they can go before they need to pull back. Next stock is BABA. That is one that we've mentioned a number of times.
Bible gap
well.
up down here.
Yep. 2 days ago, it had a breakout. That could have been sold into because in context with the chart, it's getting ahead of itself. If you prefer to sell on weakness, then you could have sold it yesterday. If you're a longer-term trader and believe the stock is going to overall, it's a leading stock, it's going to continue higher, should markets continue to trend higher, you could take partial profits and, again, trade around a core position. Nothing wrong with that. There's lots of ways to manage or to integrate your trading personality into this type of market environments, because you obviously don't want to go against the grain of that. Again, it's like, I know myself, for instance, I like to buy on strength. That's just the way I'm wired. But what I do is I find this, once the stock gets logical support, then I am looking for a buy entry very close to that support. So all I need to see is some confirmation of strength, and the 620 lines work very well. As that also gives me the psychological advantage of saying, okay, I'm buying on strength here via the 620 lines. So find something that works for your trading personality, and then then it should feel natural. You should feel like you're in the flow when you're buying and selling stocks. It shouldn't be a battle. Because you don't want to be battling your trading personality. That's not something that can easily change, and it's maybe not something you really want to change. You just need to learn to work with it. Another stock is AVGO. That was, we mentioned that one on July 31st as pulling into a lower risk buyable zone, and you can see that it got support at its 20-day on August 3rd. Then it moved higher. So if you had a position in this, if you bought around that level and then held into its earnings on September 2nd, you were sitting on a bit of cushion, profit cushion there, so you might want to actually play earnings roulette and sit on a position. But you'd sell into that selling pressure, because after earnings was reported, the stock sold off on a substantial volume, and it has since pulled back to its 50-day. Where it seems to be getting support, but again, keep in mind, you want to look at the price history of these stocks, and you'll notice that it has a history of violating its 50-day moving average. So, at where it's trading right now, you could put a stop just under its 50-day, and that would pose, what is that? That would pose maybe a 2% risk on the trade if you believe it's going to go higher from here. Actually, it was earlier today when it was closer to the 50-day that your risk actually would have been all of maybe 1%. Another name is AMWD. That is one we mentioned on August 14th when it was getting real tight at its 20-day support. And then it broke out a day ahead of earnings on August 22nd, and it shot straight up. Earnings were good, and by the third day of straight up action, that would be August 24th, the stock's clearly getting ahead of itself. So at least partial profits could be taken as it closed in the lower half of its trading range on August 24th. And it since has been moving sideways. It looks like it's constructively setting up for a potential another actionable buy point. You can see that the volume has, over the last 6 days, the volume has been lower, and the price bars appear to be getting tighter, and it seems to be moving right up against its 10-day. So again, this is one to watch for. And finally, the last but not least is gold, GLD. We've been mentioning this as one to watch for constructive pullbacks, but it's a tricky ETF because these precious metals don't obey moving average lines much of the time. There's many cross currents that will affect their prices, and they can be manipulated. The Chinese, for instance, are no strangers to manipulating the price of gold, and they come with a huge bat, so they can be influential. But at any rate, it is best to buy these types of names, SLV, GLD, on pullbacks in context with their overall chart formation. So, for example, last May, from May 27th to June 2nd, this ETF became very quiet and tight on low volume, and it undercut its prior low set in April. So you could have taken a position here with a very tight stop, since the price action was very tight. So your risk would have been absolutely minimal, and then it had a big up day on June 3rd and proceeded higher from there. And likewise, it repeated this action to some extent last week when it undercut its prior low set in July. So its volume was higher, making it a trickier trade. That is, the sell-off volume last week was higher, and it makes it a trickier trade to just want to step in, because you start to think, well, it's not done selling off. But given the fundamental backdrop of QE, one could take a small position. You don't have to take a full position. And knowing, and by that I mean you take a small position so you can put your sell stops deeper into the pattern. In other words, you can allow, say, for a 6 or 7% correction, and you would still be in the position because it's a small one. Then on Tuesday of this week, it gapped higher, had a little mini gap higher, moving through its 50-day. I think it gapped up to its 50-day. So you could then take another small position at that point, and then it finished strong for the day. And the last 2 days, it's pulling back on lower volume constructively. So it looks like it's setting up potentially to move higher once it's done with this current consolidation. And right now, the volume being traded today is exactly at 0%, meaning it's right in line with the with its 50-day average. And since it's doing that it's doing that basically an hour to the trade. So my guess is that it will finish the day trading below its 50-day average. So it should have another constructive, quiet trading day here. So keep an eye on this one. And yeah, actually, on that, I think I'm going to go ahead and turn it over to Gil.
Pass the buck again. Okay. You know what I think might be useful is, here we go. Let's check it out.
Actually, I wanted to say one more. I wanted to say one more thing. Actually, it's sort of in the back of my head about how when you're surfing or when you're just observing the ocean, you get the little waves, little rip tides, the bigger waves. And when the tide comes in, it pulls everything with it. When it comes out, everything gets pulled in and out. And this QE manipulated environment has demonstrated that action very well. We don't get so many big waves these days. You certainly don't get tidal waves like we used to in the 90s, where you could really ride them all the way to shore. They tend to break down. They tend to be medium-sized or smaller waves, and there's lots of them. And we know that the market averages tend to not trend very well, so they tend to go sideways a lot of the time, or if they do trend, it's short-lived, and then everything, when that trend is done, say it's a 1-week trend or 2-week trend, everything gets pulled back in. And the bigger waves, the waves that have shown themselves to make more profit, are the ones that get pulled in the hardest often. So that's, I think, in keeping with taking profits when you have them and keeping your stops tight. Because if you can visualize with me, the ocean and all these little waves, singles and doubles, in baseballese, there's a lot of singles, and that's the way one can survive and thrive in this QE manipulated environment by just taking your profits when you have them. And you hit a lot of singles. I mean, Gil did this in 2014. He hit a ton of singles, and he had a lot of losers too. But the singles more than made up for the losses. So he's able to finish up.
Actually,
Over.
I'd say I had a lot of doubles, maybe some triples. So not all singles. I would say. There were some big movers, but I did play them like on a shorter term basis, riding a trend and coming in and out on the overall trend. So in that sense, I guess I hit a single and then I'd steal second and then I'd steal third and eventually come all the way home to be up triple digits in 2014. So
I like that analogy. Actually, yeah, you stole bases. That's it. Because your initial was always like a small gain, but then you could add to it. So. Yeah, so that worked very well. In 2014 was certainly one of the most challenging years. Media accounts say 2015 was the most challenging year in 78 years, which I would agree with. Based, if you're trying to trend follow, and use old methods, 2015 was an absolute disaster. And it also explains, how these Top Gun guys who've been trading hedge funds for 10, 20 years or more with exemplary track records prior to QE have been falling all over themselves since 2009. I mean, they not only can they not beat the market averages since then, they're finishing each year negative. And when I say they, I mean virtually the whole lot of them. And if you average all the returns, they're in the red. It's unprecedented, but it just shows you the markets change. They always change, so you need to change with them. Otherwise, you will not survive.
Okay, are you done?
All set.
Okay. Well, what I'm gonna do is run through the focus list, which I have here on my HCSI. Again, if you guys have any questions about the indicators or whatever, contact HCSI. It's support@highgrowthinvestor.com if you have any questions about anything here. And a lot of these chart views, I think, are standard. So let's look at American Woodmark minus 31.9%. This is about 15 minutes old, so it's probably a little bit different. What are you showing right now on this one in terms of the volume levels, Dr. K?
It's minus 23%.
Okay, so it's starting to pick up a little bit relative to 15 minutes ago, but it's sitting more or less at the 10-day line. Everything's looking pretty good. But, if you bought it down in here, you could take profits. Maybe you get a pullback to the 10-day line. I don't know. We'll see. Let's see. Atlassian team. This one, you had the two pocket pivots. You see how you have the indicator bar that's blue, shows you the two pocket pivots as it's coming up through the lines here. You got a third one here, this red day. If I blow it up, maybe see a little better. But this red day here, it's a little heavier volume. But notice how it got really strong support right there. And that looks constructive. And now it's just cruising higher. But if you look at this on a weekly chart, what you'll see is a big cup formation. Now, you might want to call this a pod, a punch bowl of death, and so you think it's shortable. But I would caution you here that the essence of a punch bowl of death generally is that it's straight down, straight up formation. In other words, the stock takes no time to consolidate the gains off the lows in order to set up a better trend to the upside. And you can see here, this thing went sideways for about 3 months before it broke out here, and then went higher. So here it is here, and it breaks out here, and it's gone higher. Now you're in this sort of a big cup. You're forming a handle, and if you look at this, study this carefully, you can see that you're getting supporting action here as volume is drying up, and then the next week you pick up off the 10-day line, volume picks up. So that looks constructive. I can't say that looks bad. So trying to buy it here I think is a little bit extended, so you're probably better off trying to trying to wait for some kind of a pullback to, say, the 10-day line, which is down here closer to the 30 level, so rather than chasing it up here. But it may set up again and then break out. So, but you gotta buy these things on the pullbacks rather than chasing them on the upside. So let's keep going here. Boston Scientific, that's a boring name. I don't like it, but it's just hanging in there. I guess if you buy it on weakness, you're okay. To me, it's boring. AVGO at the 50-day line, so maybe that's your most opportunistic entry spot right there. Drew Industries. This one's been acting. Let me shrink this a little bit. It's a little easier to see perhaps. This one's acting okay, but probably the 20 days where you want to be picking this up, but it's acting okay since the pocket pivots. Dicom, this one we took off our list, and you can see the breakdown. It actually has become sort of a late-stage failed-based short sale setup. So for anybody who's alert to that kind of stuff, you can see you had the breakdown here. So if I blow it up just a pinch here, you can see you had the breakdown here on heavy volume. So that's your failure. And now you rally up to the 50-day line and you roll over again. Now you're rallying up to the 20 line. Maybe this becomes shortable again at this point. So that's pretty much typical kind of a short sale setup. And of course it occurs in a stock that was a pretty good leader before that. This thing had been trending higher for a while. Let's see. Let me look at the weekly chart real quickly. You can see you see how this is more of a pod-like formation because you go straight down and then you more or less come straight up. There's no period of time spent consolidating. It tries to form this wedging sort of handle up here and then it eventually fails. So this is a pod short sale setup, and I would be more excited to come after this if we started to see the market fail. So that's something to keep in mind here. So put that on your short sale watch list. So let's keep cruising along here. Eagle Materials, this is another one that we took off, but I bring it up because it's also a late stage failed base. You can see the breakdowns in here where you failed. Here's the breakout, and then you fail and you bounce off the 50-day, and then you're fluttering around the 20-day for a period of time. Now you're breaking down again, and there's a 65-day exponential here, which I'll use on the short side, but notice how it's probably rolling over again. And if you look at this on a weekly chart, you know what I need to do is we'll pull up a weekly chart, so I'll just toggle between the two so we can do it this way. Let me set this. So if you look at the weekly chart, see that straight down, straight up? So that is a potential short sale candidate if the market starts to get into trouble. Okay, so you want to keep that one in mind too. And that's one of the reasons I've got this still on my list, because people ask me, how do you generate your short sale watch list? Well, it's pretty simple. It's the stocks that I had on my buy list that start to fail once they get into extended positions. This Eagle Pharmaceutical had a pocket pivot way back here, I think it was, and it's just kind of tracking sideways. Earnings come out on November 9th, allegedly, so it's acting okay, hanging along the 10-day line. Volume is down a little bit today, so that looks okay. Somebody says, does Ulta look broken up to short? Let me go back there real quick. That would be Broadcom. Right here. No, because it hasn't broken down through the you're one thing I would caution you from is you're seeing this and you want to short it here, and you're kind of late, okay? Because if you're going to short, I guess you'd short the break on the 10-day. But the bottom line is, if this is the breakout point, all it's done is come back to the breakout point. So you can't say that this breakout has failed because you haven't blown through it. So it's not really a short sale setup. And if we look at it on the weekly chart, over here, that's all you're seeing. So there's no setup here yet. If it had failed, like notice how it broke out back here and it failed, that would have been seen as a potential late stage failed base, but it didn't continue going lower after. Well, it broke down, and you could have made a fair amount of money shorting it, but after that it did recover. So, anyways, let's go to EBIX is another one. That's holding real tight along the 10-day line. Whoops, what happened here? Oh no, look out. Here we go. Okay, yep. And that looks okay. Looks like it's in a low-risk buy position here. Edwards Life Sciences, you had some pocket pivots in here. You can see where they're highlighted in blue. This will highlight both 10-day and 5-day pocket pivots. And sometimes it will miss occasional pocket pivots, but for the most part, it's highlighting 10 and 5, so you can pick them up real quickly. And I like to see clusters of 5-day pocket pivots. So you get a couple in here. It's hanging tight. So you see a couple down here. It's hanging tight along the 10-day. That looks okay. Ellie Mae is another one holding pretty tight, and volume is really dry right now. Minus 79 I'm showing. What are you showing on Ellie as intraday volume here, Dr. K?
Right now it's at 79 exactly.
Okay. I'll get to some questions in just a second as soon as I run through this real quickly. Fabrinet, this was Bible along the 20-day. You know, see how the volume's drying up and then you get a little 5-day. Actually, you get a little, is that a pocket pivot? No, it's a 5-day pocket pivot, but there's only one. But you could have just bought it, I think, on the tight action. So that's what you're looking for. Facebook is a breakout. I think if it pulls into 128, 129, that's probably a lower risk area. But we were already talking about the pocket pivots down in here when it had two pocket pivots right along the 10-day line. So that's an early entry, gets you in before the breakout. Whoops, Gigamon. Now, Gigamon's interesting because, you know, this is where you have to be resourceful, and you kind of have to throw out the old rules about getting scared by weakness out the window, because what happens is this thing is in a base, okay, and it deserves to be in a base, because if you look at the weekly chart, let's see if I can toggle over. Yeah, here we go. You look at the weekly chart, it's had a nice run, okay, all the way up. And now it's basing. So the pullback into the 10-week line here coincides with this undercut of the prior low right in here. And that's an undercut, and the volume's drying up. So what you do on an undercut and rally, to me, it's a pretty simple trade. All you do is you take the prior low. Once the stock trades above that, you use that low plus, you know, 1 or 2, maybe 3 maximum % on the downside as your stop. It's pretty straightforward. You don't have to worry, is it shakeout plus X % or whatever, or X points, whatever. You just can buy it there. Now you had a pocket pivot, it looks like. Is that a pocket pivot yesterday, Dr. K? It's a 5. Yeah, it is.
I think so.
You have a pocket pivot off the 10-day line, but you could have gotten in a little earlier. So this is acting pretty well. I think this is a leader in this market and should probably be bought when you can find ways to buy on pullbacks. And the undercut and rally move is a typical Wyckofffian type of setup, a Richard D. Wyckoff type of setup, also known as a Wyckofffian spring or Wyckoff spring, and that's a valid buy setup in this market. You know, just as an aside real quickly, oh, wait a minute, that's not going to do it for me. Let me go up here. If you look at Silicon Motion, look at this thing. It looked like death over here. You see this? It undercuts this low, and it's breaking the 50-day line and looking like death. And basically what happens is it rallies back above, flutters around, and then gets back above the 50-day line. Now it's trying to break out again on a pocket pivot. So, you know, you could have bought this. Once you saw this rally, you could have bought this on the undercut and rally, and you could have made some money on this trade. But it shows that this pattern, this particular setup, seems to work with regularity in this market, which I think is very, very interesting. And it shows you that this is something of a fake-out market. Let's see, I mean, if we see anything on the, real quick, let me check the weekly chart. Yeah, and you can see sort of the shakeout there underneath the 10-week line, but it's entitled to some, you know, correcting here and maybe even getting kind of ugly because it's had a big run here on the weekly chart. So let's continue. Grubhub, we already looked at that one. That's acting pretty well. Intuitive Surgical, it's kind of slow. It's just hanging along the 10 and 20-day lines. JBT had a pocket pivot, I think, here a couple days ago. I think there's actually 2 in the pattern. See, this isn't picking up this one. I think this is one, but I'm not sure. But it's hanging in tight. That looks good. And here's Line Corporation. Now, Line, I think, you know, the 44 level, which would be the top of this this little structure here. You see you have the undercut and rally again. There it is again, the undercut and rally, and you pop to the upside. And now it tried to pull back yesterday, testing that 44 level. It held. Same thing this morning. It held. Now it's moving higher. Volume is low today, but it's acting pretty well. I'm actually long that one. I'm long it from the undercut and rally. Next one, Max Linear. This is one we took off. But I'd watch this because it might be trying to make a comeback. See the pullback in here? Some of these names, you know, I'll keep them on my watch list. Medivation is gone. They were taken out. I'll keep them on my watch list because they'll come back. And you see some sort of a setup, either a roundabout or bottom fishing pocket pivot or a undercut and rally, and they run higher. Now, Mobileye looks pretty good in here. I like this. Very tight. What's the volume level right now in that, Dr. K?
We've got minus 21%.
So it's kind of drying up here. Looks inspective.
Yeah. Getting tight.
Yeah, I've been looking to buy this back after it flipped out at 50 the other day when it ran up here. Probably pick some up right here. Yeah, we can pick up a little bit right here. Oh, I'm sorry on that. Someone said Ulta, not Broadcom. My mistake. Why am I don't know what I'm thinking there. We'll get to that. Give me a sec. Momo is just like living up to its name, pulling into the 10-day line. That's Momo, definitely. NetEase acting pretty well, hanging along the 10-day line. Nevro is a new one. Had a pocket pivot 3 days ago, inching a little bit higher. Interesting new biotech. Notice the market is now trying to turn higher. And let's see. Now here's another example. We kept this one on our list because I wanted to see, it looked ugly here, but what I saw, and this is one did we keep this on the list? We did, because it undercut this low, and I wanted to see whether it would set up again, and it came back, retested this low, and now it's back up to the highs. And this is so typical of this market, okay? And so you really need to be watching for stocks that are doing this, because sometimes they have your best moves off the lows, and the breakouts are usually kind of late. So you really want to be watching for these types of setups. Let's go to the next one. NVIDIA, they're just pulling. They announced a shelf offering, mixed security shelf offering, so that's a little bit tired right now. Ollie's, this stock I hate, and it just pulls back and forth. I guess you buy it here at the 50-day line. Shutterstock, we put on back here as a pocket pivot. It's trying to break out today, but you could have gotten in on the low volume along the 10-day and 20-day per our comments over one of the weekends, I believe. Oh, here's SEMO. I left it on here. Huh. Okay, here's silver pulling into the 50-day line. Again, another undercut and rally move. And I think, like we've been talking about, I think if you're hot to buy silver and gold, I mean, speaking for myself, I just prefer to go for stocks because like silver and gold seem to be news-oriented and event-driven. If the Fed is going to lower rates or it's perceived that they're going to lower rates, and everybody comes flying into them, and then if it's not, then everybody flies out. And so it's pretty choppy, but the trend in these things has been reasonably strong since the beginning of the year. You can see that on the weekly chart over here. But you're kind of in this chop land as nobody really knows what the Fed is really going to do when they meet on September 21st, which I think is a couple of weeks from now. So anyways, let's go continue on. So I'm wondering, are you guys liking this format where I'm going through the VoSI focus list? Square, I think, is in a buy position. It's pulling into the 20-day line. What's volume right now? I'm showing mine is about minus 60 here, Dr. K. What are you showing?
Yeah, it's minus 60 as well, and it's just the volume's quieting down. It was exactly what you want to see because it's close to support.
Yeah, I gotta check this. Let's check this on the 620 real quick. 620, where are you? I know you're here somewhere. Come out, wherever you are. Here it is. Let's look at Square. Yeah, it's just kind of tripping around underneath the. You got a Mac. I'm sorry, you got the Mac. Not the MACD, but the moving averages have crossed here on the upside. I don't know. You know what?
Yeah, it looks like a good entry point.
Yeah, I'm just going to pick up a tiny little bit here. I'm going to buy 5,000 shares right here at 1187. There's some offers there, and they're all standing there, so I'm just going to pick them off. I've noticed if I sit there and I put 5,000 on the bid, all of a sudden all the algos ratchet up. So what's interesting to note is that a lot of the price movement that you see is not actual buyers and sellers or people, it's algos, and they're just moving around, playing around with the bid and the ask. Like this morning online, I came in, I saw it pulling into like 44.30 on the offer, so I put a limit order for a measly 1,500 shares. And that's 1,500 shares, which for me is like almost a non-existent position, but I'm just adding a tiny bit to what I bought down lower on the pullback towards the 44 level, but I put a limit at 44.30, and the next thing I know, the offer's gone from 44.30 to 44.48, and all the algos are bidding, 38, 40 cents, and so there's are those real buyers, or are those just algos messing with everybody's heads? I think they're just algos messing with everybody's heads. So I think a lot of this stuff you see is a bunch of baloney. So I wouldn't be intimidated. Like for those of you who have level 2 on your order screens, I wouldn't be intimidated by seeing big offers. So I've seen them disappear in a hurry. So one day I was trading GPRO, and I made a couple of bucks on that thing trading it a few weeks ago, and there was like a 50,000 share offer at 15, and that thing just got eaten up in a hurry. Okay, where were we? Square, we like Square. Tayland, this one's in deep doo-doo land. So, I've been waiting for this one to undercut these lows. I messed around with it down here, and you'll get a few cents out of it on the upside. But for the most part, it hasn't really wanted to move. It got tagged on earnings, but it's you might wait for it to undercut one of these lows over here on the left side. But I'd be a little cautious. But it looks like it might be trying to set up to go higher. The other thing to watch for would be a pocket pivot up through the 20-day. So TWLO coming in. I mean, I've got a position from down here, so if it wants to come into the 10-day line, I might just load the boat. It hasn't really wanted to. I've been watching to see if it's going to do it, but no such luck just yet. Ubiquity is hanging along the 10-day line. This has been a great name, slow and steady. Here's Ulta for somebody who was asking. That one we took off of our list on this day, and it hasn't been on the list. I keep it on again because I want to see whether it comes back to life. But maybe you're going to undercut these lows way over here, but it's looking pretty grim. And I think, this thing that has had a long run. If we go to the weekly chart, you can see that it has had a long run, so it's probably now entitled to correct and build a whole new base. So for my money, I'd be out of that one and looking at other stuff. There's newer stuff, better stuff to be in. And, again, I think when you see something break off the peak on the heaviest downside volume, I would call this support way over here. That kind of a break off the peak after a run, that's usually at least a near-term sell signal. It could set up again, like we saw with Silicon Motion, but for the most part, that's a time to say bye-bye. Universal Forest Products been boring for the last month, but hey, so has the market. So this has been a market stock. But notice how it's nice and tight along the 20-day line, and looks like it might be ready to move higher. Earnings come out at the third week of October. Okay, pushing through. We're getting towards the end of this. Viva. I don't know why I always think of that song Viva, that Elvis song, Viva Las Vegas. Viva Systems hanging tight after the Bible gap. If I thought it was best bought on this little pullback, we talked about that in the VoSI focus list review over the weekend, where we make some notes. Vulcan Materials is another one that is on my short sale watch list, and I keep it up here on here just to show you guys another one. Now notice you also have Eagle Materials has broken down, so there's two in the group that have broken down in similar fashion. But again, if we look at this on the weekly chart, we can see here's the base, okay? So you've got this, it had a nice move off the February lows, right? No, the January, yeah, February lows. And then it built this base here, and it broke out, and now it's failed, okay? So that's what you see here on the daily chart. So what happens then is you get the obligatory rally back up to the 20-day where it becomes shortable a couple of times on rallies, and now it looks like it's headed lower. It's starting to undercut these lows, so watch out. And who knows, if Donald Trump wins the election and he's going to make America great again, I guess that also involves building roads and bridges. Although he does have some different ideas about privatizing it. And I can tell you in Orange County here we have, I think it's Highway 187, I'm not sure. Anybody who lives down there can correct me on this. But there is a toll road that was built with private money. And that's worked out pretty well. And when the country was first started, most roads were built as toll roads. They were private. And we were recently, 3 weeks ago, in Bishop for a little while, doing some fishing in the eastern Sierras. For anybody who's been up there, it's beautiful. Bishop Creek, Pine Creek, Big Pine Creek, all those canyons up in there on the east side of the Sierras that go up very steeply. But to get up to Mammoth from Bishop, it took a long time on the trail, and so a guy actually built a wagon road and cut the time down from like a day or two to 12 hours. Now you can drive to Mammoth from Bishop in about 45 minutes, but back then that was he charged for that, but that's how roads were built. And I think it's a little more creative to think about putting private money to work, maybe building roads, because the bottom line is people use roads, and you can derive a steady income flow from that if you build it right. And I think that a private company has more incentives to save money and build efficiently versus a government agency. So that, just my 2 cents on that. But these may come back, and so thematically, if they undercut these prior lows, and maybe that sets up, a return from the dead. Otherwise, if we get into a bear market, these could become primary primary short sale targets. And in fact, they have worked on a tactical basis when you get these little moves breaking off of the 50-day and 20-day moving averages. So, okay, we're pushing through 9 o'clock, but we started about 5 minutes late today. Dr. K and I were deep in discussions over the market situation. Here's VoSI breaking out. Hey, breakout buyers, here you go. I know you guys are all breakout buyers, closet breakout buyers, right? There it is, big volume. We're projected pretty high. You can see the green. I don't know if you can barely see this green thing showing pretty high volume. But if you're alert to this on the pullback and here, the volume draw out, the voodoo action at the 50-day, that's your lower risk entry point. Now you're turning and everything's looking good. Is there some news catalyst for this, Dr. K?
I'm not sure. It could just be just people rushing into the old standard breakout. Here, I'll just pull it up right now and see if there is anything on it.
Weibo just trucking along.
See, there's nothing. There's, I mean, no, there's nothing of news today.
Okay.
Or yesterday. Nothing significant. It's just a breakout situation. I think, you know, it's a low-price stock. It's thin, and I think you got a lot of retailers in this kind of name kind of piling on because they're all excited that it's hitting new highs.
Yeah.
So
and
on that basis, it could be a short actually, as if it, you know, as it gets ahead of itself.
Yeah, it's kind of like Nintendo yesterday because Apple announced they're putting Mario Brothers on their phones, I guess.
Yeah, so the stock was up like 30%.
Yeah. Let's see. Watching Apple here, down a couple of percent because they came out with it. Now that actually posted a pocket pivot yesterday, which I thought was constructive, but now you're blowing it on this now, so that doesn't look so hot. But it's probably not as big a deal as it sounded like it was. Anyway, some real quick questions here. What about KLIC as a short? So somebody wants a short, huh? Well, that's, you know, you could look at this as a late-stage failed base. So it failed here big time, and now you're in the top of the range here. So theoretically, it is in short sale position in terms of executing a trade and then using the highs of the range as a stop. If you want to give it more room up to 72, 78, I guess you could, but optimally I might look for a trade up there if I was going to short it. The only thing is I'm not really looking to short the market here. I'm actually looking to buy on pullbacks, so I'm not sure, you know, I'm not sure if that's the same person who wants to several people want to short today. That's interesting, huh? Mobileye turning green. Yeah, that's because my algo is buying up 50,000 shares, Scotty, so don't get too excited. Direct, what's this? TMB, what about it? Bonds, 20-year Treasury bear. If the Fed starts raising rates, I guess this would be a good one to play. You got any comments on this one, Dr. K, before we shut her down?
Yeah, I mean, you know, these, if you look at TLT, that's a 20-year, you know, it keeps moving higher, just on the basis that interest rates are moving lower in anticipation that the Fed will not be hiking anytime soon. Fed futures certainly are putting the odds once again. I think you have to go out to next year, early next year, before I think we see a rate hike. The odds being above 50%, something like that. But at any rate, you know, it's just the fundamental backdrop. I don't think anything's really improving or changing. There's nothing material. There's no material evidence, and the Fed's hands are tied, and I think all these central banks' hands are tied. So, you know, we've got all these central banks basically saying they're going to go more negative if need be, and Yellen has made it clear that that is also a possibility on behalf of the Fed. I mean, if it came to it, she has said that, gone on record twice, saying she's not opposed to negative rates.
Right.
So I think we need to see material change. Sorry?
I think they're eventually going to do something like that. But you know, the wild card though is my thinking is this on the economy. So let's get into some macro stuff real quick though. Someone asked about shorting Twitter. Yeah, I guess if you were onto it yesterday, but now you got a gap down. You're a little bit late. I don't know. This is my thinking on Twitter is that it's too subject to news. Yeah, I know they're saying that nobody wants to buy them, but how do you know somebody doesn't come out somewhere out of the blue and buy them and you get screwed? So I'm not, like I said, I'm looking to go long on pullbacks. I'm looking at pullbacks today. I'm not looking at getting heavy short. So I'll show you a name I like. TPIC, I own this one. You had a pocket pivot breakout on a flag move. Did we put this out as a pocket pivot here, Dr. K? Or did I run it by you and then you rejected it?
Let's see.
That's always,
in good order.
just
Let's
so
see.
you know, whenever we
TPIC.
miss a pocket pivot, I always tell Dr. K about it, but he always rejects them. So that's
Oh yeah, that's Gil's rule of thumb. If it's a good pocket pivot, it was his idea.
it's mine. That's right. I put it on. Okay, but if it fails, that's Dr. K's. No, actually, we have this third person who's responsible for all our screw ups. So, anyways,
Got to pass the buck somewhere, huh?
that's right. So now you're having another pocket pivot on a breakout. So, but again, you know, if you look at the weekly chart, that's what it looks like on a weekly. But if you use our methods, and you know, you don't have to wait for us necessarily to put out a report on something. You can sort of, you know, judge it on your own merits if you're experienced using pocket pivots and things like that. But you know, there's no way to buy this using IBD's methods, and a lot of IPOs get started this way. And I find that you can actually, if you look at this, you'll see here's a pocket pivot down here. Let me bring this up. Here's a pocket pivot right here, okay, right there, which is a gap up off the 10-day, which could have been bought. I don't know if you call it a Bible gap up. If you want to make this average of volume, I guess it was pretty heavy. But then you pull back, and you get close to the 20-day, and then you have another pocket pivot right here as you're coming up through the 10-day, and then you pull back into the 10-day. The volume more or less dries up, and now you're going out again. So I've been playing this one. There's another one that I've been playing around with as well. Let me bring that up real quick.
Actually, on this one, the TPIC, yeah, the August 11th, that was you had a pocket pivot on an IPO, which often has a pretty good chance.
Yeah,
and that one, I was just looking through the archives. You know what? I think you know, this is, you know, this, you can't kiss all the babies, but I wish I had seen it on this day. I think it. You know what? It was trading. It was an IPO. It was trading for less than a month.
Yeah,
that's probably why. But yeah, that was a perfect buy point.
yeah, and it's going higher. But you'll see there's no way to buy this if you're using typical IBD, CAN-SLIM, O'Neill methods. So. But just because we point that out doesn't mean we hate IBD. But you know, I left IBD and William O'Neill and Company because I thought the organization, there were a lot of dumb management moves, and I think what's happened now bears all that out. Even at the institutional business, you know, when I was there, we had 35 people working there. I oversaw something like 18 institutional sales reps. We were in our heyday, and today there's only like 2 or 3, and they're basically trying to be like every other research firm on the street, which I think means they've lost their edge. So an IBD to me has become mostly a marketing organization. Bill O'Neill is really out of the picture now. Scott's running the show, and I think it has lost its creative driver, unfortunately. So, but you know, I think you can take other methods. I mean, O'Neill built on Livermore and a Wyckoff, as far as I'm concerned, and Darvis and those other guys, and we've simply built upon all of those. And you just, every new generation builds upon the prior generation's work, and isn't that the way it should be? So that's all we're doing, and I think that we're providing people with some very useful ways of looking at the market and some modernized tools based on the philosophy of the OWL, Neil Wyckoff Livermore. So, you know, it's honest work, you guys. Nobody hates anybody, although I'm very disappointed with the direction that IBD is going on into. If they pay me enough money, I might go back and fix it. You can come with me, Dr. K. Anyways.
That'll be an adventure.
Right.
We'll have our work cut out for us.
XON. Is that JT? Yeah, JT, you're in love with these things. Give it up, man. These things, I don't know, this thing's a piece of garbage. I wouldn't touch it with a 10-foot pole. It's right up there with this one. Oh, wait, they got bought out finally. Maybe you're making some money on that one. But I don't know. Come on. That's kind of a stretch. Maybe if it came out, I don't know. It needs more time. Seriously? INST. My kids. I didn't know you had kids, Scotty. I thought you were just a roaming bachelor. Instructure. That's pretty interesting. Really thin stock, though. Yeah, that's coming out of a big format. Yeah, that looks pretty interesting. Nice idea there. Anyways, we'll see what it ends up doing. All right. I think this is gonna last question for the day. anyways, if you guys like the format today where we go through the focus list in a little more detail, I think that keeps things, no pun intended, focused. But let us know what you think about that. Site 1 landscape supply. I don't know. This one looks okay, but it's really kind of thin. It's like the other one. It's really thin. But the pattern, I can't really fault the pattern. It's just a little erratic. My advice would be if you like this one, uh, then you pick it up on weakness. Anyways, that's all we've got. We've gone over 5 minutes. So we started 5 minutes late, went 5 minutes longer, so an hour and 5 minutes. And I think we covered all the bases today. And you know, if you look at the focus list, at least the names that are still on, take out some of the ones that we've taken off, like Dicom and Vulcan and Eagle and Ulta. Take those out. You'll see that most of the list is hanging in there and it looks relatively constructive. So I don't think you can necessarily argue for a roaring top or bear market to start here. But of course, anything can happen at any time, so you want to be alert to things. The first thing that I think you would see if you saw a bear market start is a lot of the constructive action in these names, the big stock, NASDAQ, tech names, FB, Amazon, Google, Microsoft, just kind of hanging out. You know, you might see them start to break down. That might be a clue. So I just watch for that. And, you know, if I see that sort of thing happening, I have a button on my trading platform that says sell all positions, and I just click on that and say goodbye to everything. So if you're wondering why a stock suddenly sells off a dime or so, that's me just unloading. And I don't care if I sell things down a dime. I'm either in or I'm out. There's no in between for me. Anyways, you guys, hope today's session was helpful. Thanks for showing up, and we will catch you next week. Have a great weekend. Take good care of
So long,
yourselves.
everyone.